We just saw the opening bell, and we're taking a look at our aggregate position on our review for the day. And it looks so far that we're going in the right direction. We're still very close to the center, not exactly on the center. I'd like to see maybe our position get down a little bit. I'd like to see a little bit of a market decline here, but you know what? It's not too bad, so I'm not going to worry about it too much. The thing I am kind of keeping an eye on here is the VIX. Let's just go over to the VIX here for a second, because we've come down, as you can see. We've come down from these very high levels. We started trading in between 17 and 22, which I had mentioned in a previous video. That's really kind of, it looks like it wants to trade in this range right now. And if the VIX starts to go up back up to this 23 level, which was a support line before, then it'll become resistance here. We'll probably get a stop here, and then it'll trade back down back into the 17 to 22 level. And that would be ideal for our position, actually, because if it trades down a little bit, I think we're looking good. I think the upturn, there is an up bias to the market right at this point. We're talking April 28th, Monday. I think there's a little bit of an upside bias here. We've been going up in the stair-step fashion for a few months. So we could be trading up a little bit here, but even if we went up, there's a major resistance point right around 13,000. I suppose if the market does break above that, we could have a very roaring bull market here, and we could end up doing something to adjust our position. But based on the VIX, I think we may have a position that we will begin trading up here on. If not, we'll at least we could hit this $17 level here, maybe around 18.5, and then go back up from there. So that would be that would mean the market would have to go up a little bit, and then it would go down a little bit. Because remember, the VIX always trades in opposite direction of the market itself normally. So here we are. We're going to just take a quick look and monitor our current position. We've had it on now for a couple weeks. Now we manage by the numbers. In the case of the kind of system that we're doing on the money every month system, we'll use delta, gamma, theta, and vega to determine what our current position is. We're currently short 71, which means that we are short 71 shares of our overall portfolio. And if stocks were to decline, we'd make an extra $70 just on that. Because we are short stock, we make money when it goes down, right? Gamma, we don't have to worry about too much. It's minus 62, which is normal when you have a positive theta. Theta has increased quite a bit from last week. If you looked at the previous video, you can see the date up here. Today is the 28th. We've been doing the videos, review videos for the past week or so. We've gone from about a 35 theta to 44 theta, which is really a nice position to be in. You can see theta is increasing almost on a daily basis here. So that is very, very positive. All things being equal, as long as the market does not give us too much of a price risk here on either way, then as long as we have positive theta, which means we're collecting $44 a day on our position, all things, the prices being relatively stable and within a trading range. Our vega is a positive 62.70. Now I'm looking just at the overall totals, which means that we are long 62 shares of vega. Being long vega means that we make actually more money when the stock market goes down. As I mentioned, vega moves opposite to the stock market. So if we're long 62 vega, that means when this goes back up, which means the market would go down, we would make an additional $62. So our current profit and loss is still relatively small, but we are not out of April yet, and these are all May positions. So we've still got quite a ways to go. We're up a little bit for the day, but that will increase, as I mentioned, over time, because what happens is our profit and loss for this particular day, each day it each day that passes that we stay within our range, which is absolutely huge here. We have a really, really big range. I mean, all the way from 136 all the way up to 154. So we've got quite a bit of room here to move in this position. Let me just show you what the day step looks like at this point. Let's see, right at the current price range, if price goes, let's see, we're just talking about just after May 5th, and we're up to around $400, and then after that, on the 12th, about a week before expiration, we're up around $900. If we hold this all the way to expiration, we're going to be up around $1,100-$1,200 on this demo account. So, you know, if you have, this is such a small position, and you're talking about making $1,200. Look at the margin requirement down here. It's only $1,600 for all of our positions. So you're talking close to a, what is that? Maybe 80% return on investment. I mean, it's just unbelievable. So all we have to do is keep an eye on this, monitor it. Make sure that we stay within, you know, a relatively decent range here. If we go way above or we go way below, then we need to make some adjustments. And remember that all of these positions, you know, it's very rare that you put them on, and this is where the majority of traders go wrong. You put these positions on, and then all of a sudden you just kind of walk away from them, don't even check them. That's why I say you need to check them at least, you know, a couple minutes a day, just to make sure that you're within the range that you need to be in. And traders make this mistake of just like putting on a position, and when it goes against them, taking it off and saying, well, it doesn't work, I've lost money. Well, you know what? I've had to make a couple of adjustments to these positions so far this month within the last 2 weeks, and we're in a better position now than we've ever been. We haven't lost any money. We've rolled positions out. We've overlaid some other positions on top of other positions so that you're always in a profitable position. You know, if you act at the right time, if you act when it's too late and you've already got a loss on the position, well then, you know, that's you know, it's your fault. You really need to take a look at the timing of your adjustments. And you know, if you do it at the right time, you know, as long if your price starts to approach, you know, close to your break even, which is, you know, beyond this line, and down here, way down here, then that's when you need to make your adjustments, not after you've gotten a loss on the position. And adjustments are really everything. They are really everything. Well, there's a couple different things. So one is that we don't do one-dimensional trades. In other words, we're not taking just vertical trades. We're not just taking, you know, calendars, or we're not just taking, you know, spreads or whatever. We're taking a multi-dimensional approach to trading, which gives us the widest possible range of profit, so that eventually all we have to do is cash in at the end of the month, just before expiration. And that is absolutely the goal. So on a very low margin of $1,600, we're getting a nice return on our investment here. Now, if we had a $16,000 margin, guess what? We're talking about $11,000 in profit here in our center position. And that's only after about 3 weeks. So the profit potential could be absolutely huge, guys. All right, well, that's it for today. I'm just going to keep an eye on the VIX because I think, well, right now it's up a little bit. That may be an indicator that we're going to move down in the market. I don't know, but I can see the VIX moving down around 17, which would be okay because it'll bring us up maybe in the 150 level. But then I see it heading back up towards this blue trend line on the VIX, and it could hit resistance there, which means it would trade back down again, back down into our sweet spot. So I think we're in good shape. I don't think we need to make any adjustments at this point. Remember to go through each one of your individual positions and take a look at it to make sure that you're not off. But we're up pretty good for the day, and as long as the price remains relatively stable at this point, we can expect to start collecting much more money as theta increases the closer we get to expiration. Okay, guys, that's it for today. Hey, trade with confidence.